How's it going, everyone? It's Sam. Tom Lee just talked about what he thinks is happening in the market. That's a buy the dip market. He recently said to load the truck up, back the truck up to buy some of these assets. And he goes through why Blackrock sold a decent amount of Bitcoin, had a record outflow reported yesterday. So we're going to be playing that clip. I'll give you some of my thoughts at the end. If you want to trade crypto, there is a link underneath the video to CoinW. We have some exciting things happening. I've been trading and we've gotten really good returns. With CoinW, you can leverage trade. You can set it up in just a few minutes because there's no KYC. You don't need a VPN. Also, they're doing a pretty sweet giveaway right now. So deposit, you get a 10% deposit bonus and up to 3,000 SUI. Just depending on a couple different things, how much you trade. You can see as you trade more, you get more SUI. Definitely check that out underneath the video. I've been opening trades and I actually have a video on trading coming in the next 24 hours or so. So be on the lookout for that. Thanks so much. And let's get over to Tom Lee.
Is the market now free of the indecisive December choppiness that dropped the average stock by more than 6%? And what are the crucial catalysts to watch from here as January unfolds? Here to take on those questions is Fund Stretch Tom Lee, a CNBC contributor, of course. Tom, good to see you. Happy New Year.
Happy New Year to you.
So first off, Tom, what's your diagnosis of what the market's been contending with here in the last several weeks as we've gone sideways and had sort of this negative skew toward market breadth?
Markets kind of did flail into the end of last year and the first day of 2025. And I think it was trying to digest a few things, that the pretty dramatic move in long-term yields and the dramatic drop in yields in China. I think that there has been some concerns about macro as you saw some events over the past few days. And I think there was general profit taking and some sort of let's wait and see how 2025 is, given we just booked two 20% back-to-back years.
And do you think that those things will remain overhangs? I mean, obviously, you certainly have a bullish orientation. You feel as if the S&P 500 can get to 7,000 by mid-year before perhaps a pullback. Well, if we're getting from here to 7,000 in less than 6 months, you're talking about, 35% annualized pace of gain. So how do we get there?
Well, I think one thing the viewers need to keep in mind is that just because the calendar year changed doesn't mean that the strength that we saw throughout 2024 suddenly has evaporated. There are tailwinds building because the Fed is dovish, even if they're making fewer cuts. But I think one of the sort of two important things happening early in 2025 is going to be, one, we're seeing manufacturing recover. The ISM manufacturing, posted one of the highest readings in almost 2.5 years. I mean, it's been below 50 basically for nearly 3 years. And the second is that I think the labor market could be softening in a way, because whether you look at link-up data or the ISM employment, to tell us that the Fed now has to be focused back on supporting the economy. So I think this month could be quite decisive in the sense that we've got weakness because of some insecurities building, but I think it's, the same tailwinds are in place. I mean, I think it's still a buy the dip kind of market.
And in terms of perhaps the same themes being in place, does that mean that the leadership profile of the market you expect to stay similar to 2024? I mean, I know it's waxed and waned between mega cap growth leadership and then some broader participation, but we did finish again with dominance by the NASDAQ 100 type stocks.
Investors still are going to pay for earnings visibility, and that's why I think the Mag 7, including NVIDIA, are going to be important holdings. But financial conditions should ease this year. Easing financial conditions does allow some cyclicals to post better earnings growth, like financials and regional banks, industrials, and small caps. So I think that there should be a case for broadening of the markets this year. And then finally, I think in terms of risk appetite, still one of the good measures to look at how risk appetite is to look at something like Bitcoin. And at 97,000, it's still telling us that, this is still a risk-on market.
Yeah, I mean, obviously it's held almost all of its gains since that little poke above 100,000 in Bitcoin. Although I do wonder what you make of the relatively heavy outflow we were seeing in the Blackrock ETF that holds Bitcoin, whether it was just sort of deferred profit taking into a new tax year or something else.
It's hard to tell. And I think with the ETFs, it is creating, I think, an interesting dynamic, which is that someone who sells a BlackRock ETF doesn't have a 30-day holding period if they buy another Bitcoin ETF. So I think in some ways you could see people doing basis swaps and stepped up in tax optimization strategies and not really having to worry about that 30-day holding period.
This is a buy the dip market still. If there's a dip, you better buy it up. And we've seen that a lot on Bitcoin. Let's just pull up a Bitcoin chart here. Ever since inauguration, actually really since early September, we've been rallying up. Whenever there's a 10-20% dip, bought up. 10-20% dip, bought up. 10-20% dip, bought up. 10-20% dip, bought up. And we see that with other stocks too. I mean, or with just the stock market in general. He's basically saying, if you have an opportunity, you should buy. And he said that recently. He said, back up the truck with a recent tip. He said, back up the truck. We are buyers here. And largely that's been correct. The S&P 500 has done extremely well and just continues to see small pullbacks. I think we just saw a 4 or 5% pullback from the all-time high. Yeah, 4% pullback, and now it's being bought up a bit. Over the last 1 year, the S&P 500 up 26%. If you look at Bitcoin too, BTC has been on a tear over the last 1 year, up 130%. It has not. There's not been a bad time to buy, basically, with the exception of just recently with all-time highs. But generally, everyone's up. So he thinks there's going to be a broadening out as well, that smaller stocks will do well because there'll be more liquidity, there will be looser conditions. Same thing could be said for altcoins in a way. Obviously, they're very different beasts, but you could look at them similarly, which is people will go to higher risk investments, and yeah, altcoins, a higher risk aversion of cryptocurrency investment. Also explained there why Blackrock was selling, why they were forced to sell their Bitcoin. That's because their clients are putting in sell orders. It could be for various reasons, for rebalancing, to tax reasons, but yeah, generally he doesn't think it's a big concern. Let me know your thoughts on all this underneath the video. I think Tom Lee continues to hit the nail on the head. He's been right for a very long time, and that's why he gets asked on to CNBC multiple times a week, because he has been correct almost every single week on most predictions. Obviously, he did predict that small caps would perform pretty well last year, and they were kind of lackluster, but comparatively to some of the big caps, obviously, like the top stocks did extremely well. The Mag 7 did extremely well. Let me know your thoughts, though. Thank you so much for watching. I really do appreciate it. I'll see you all in the next one. Bye.